Ladies and gentlemen, the CPI data for December is officially out, and we're going to be breaking it down in this video. And later in the video, in a couple of minutes here, we're also going to go over the stock market and see kind of how the stock market's reacting and some other individual stocks that I'm looking at. So let's just dive into it. Let's not waste any time. All I ask is if you guys find value, hit that like button. Make sure to subscribe. Again, as always, I appreciate you guys as always, and let's just dive right into this video. So what we're noticing here is the CPI, the Consumer Price Index for all urban consumers, declined. You heard that right, guys. It declined by 0.1% in December on a seasonally adjusted basis after increasing 0.1% in November, according to the U.S. Bureau of Labor Statistics. And over the last 12 months, the all items index increased 6.5% before seasonal adjustment. And from my memory, and we talked about it on the channel, a couple days ago, this was projected to be flat for the month of December. So the fact that it decreased 0.1%, that is a very, very good sign. And coming down here a little bit, let me show you guys this. You've seen this before, but to break it down again, well, maybe you haven't seen it before. This is the 1 month percent change in CPI for all urban consumers, seasonally adjusted from December 2021 to, of course, December 2022. And you guys can see we had insane numbers back in, December 21 throughout the beginning of last year into the middle of last year. Then it started to fall off in July, August. It spiked back up a little bit. September, October, and now November, December, dropped from October to November from 0.4 to 0.1. Now from November to December, 0.1 to negative 0.1, which is very, very good here in the short term, right? And of course, I'd say it's too early to tell if this is just going to continue to decline. Obviously, this is the first, and mind you, this is the first decline in a month in the past year that we're seeing on this bar chart. So it's too early to tell whether or not this is going to continue to go down. But it's a sign that the Fed, what they're doing is working right now. And maybe there's a lot of people arguing on both sides. Maybe the Fed overshot this. They raised their rates way too high. Now they're going to have to cut them soon. There's that side of the argument. And then the other side of the argument's like, no. Inflation is still pretty high year over year. I mean, if we're looking at that annualized number, 6.5%, it's still pretty high. And there's people like Jamie Dimon, which we've talked about recently, who thinks that inflation, or rather the interest rates, might be going over 5%. They might need to go over 5% in 2023. So let me know in the comments, guys, what camp are you in? I'd love to know. Let me know in the comments. As always, I'm in the camp of it's too early to tell. And, I don't think the Fed should be anywhere near cutting rates yet. I mean, that's just not a reality right now. And anybody that thinks, because we just had a 0.1% in the red, negative CPI number, that we have to cut rates now, you're just not thinking clearly. Let's just put it that way. So let's break down these categories. Very important here, guys. And let me actually see if I can make this a little bit smaller, or bigger rather, so you can see it. There we go. So this shows the percent changes in CPI for all urban consumers, the U.S. city average. You guys can see these are the different categories from food at home, food away from home, energy, and the list goes on. So let's just take a look at these very, very quickly. So again, 6.5% for the all items. And for food, guys, from November to December, food in general, that includes food at home, food away from home, both of these declined from November to December from 0.5 to 0.3%, although it's still 10.4% annualized. And looking at food at home, that came down even more than food away from home, which is a good sign, 0.5 in November to 0.2% in December, which is 11.8% annualized for that's food at home. And food away from home, 0.5 to 0.4, 8.3% annualized. And looking here at energy, let's see, energy, wow, negative 4.5% overall in December, and that was after negative 1.6% in November, and that is 7.3% annualized. So that has come down a lot. If we look here at gasoline, all types, it was negative 9.4% in December. That was after negative 2% in November. That's negative 1.5% now annualized. And fuel oil, look at this. This is insane. Fuel oil has come down. It went down negative 16.8% in December after it was up 1.7 in November. And the number is still 41% annualized, which is still obviously very high. Then we have energy services, including electricity, utility. Those actually increased month over month from November to December. That makes sense as we're heading here into the winter months. We'll see. We'll see how that goes, and that's still very high, 19.3% for utility, 14.3% electricity, and coming down here even more. New vehicles were pretty much flat, 5.9%. Annualized. Used cars and trucks, this has come down a lot. So we're actually seeing deflation on this on the unadjusted 12 months ended December 2022. And that's the only one that's down. Actually, gasoline, all types, is down on a 12-month basis. And those are the only two categories: gasoline, all types, and used cars and trucks. 8.8% unadjusted decline. And we saw a 2.5% decline December, 2.9% in November. So if you guys want to see these numbers for yourselves, I don't want to bore you. I do want to talk about how the stock market's reacting as well. Just go on Google literally and type in CPI data. It'll be the first link that pops up, or you can just go, this is BLS.gov, right? Yeah, BLS.gov, CPI. You'll find it, guys. If you dig hard enough, you will find it. So let's transition over here because the markets have not opened yet. But what we are seeing is a huge run in the market. SPY currently, we all can see right now, is ripping past the pre-market high that was hit about an hour, actually not even an hour ago, 30 minutes ago. I'm currently filming this at 9 a.m., 30 minutes after the CPI data came out. And what you guys are noticing is we hit 398.45. CPI came out. We saw that a little initial flash crash, which happens sometimes. And it was a pretty big dump, 1.6% on SPY. And now it's recovered. It's recovered that entire loss. And now we're actually going to test the highs from 30 minutes ago again, which I suspect we could be breaking through this point because, again, that CPI number was better than expected. It was better than expected. That's just the bottom line. And if we look here on the 4-hour chart, 400's a big spot that I've been talking about. And it looks like that's where SPY wants to go right now. 403 is going to be a big spot to test. 410, 413. These are all levels that we've talked about on the channel. And triple Q, if I pull this up, take a look at this, guys. Triple Q, and then we'll talk about the metals, which are ripping right now. Triple Q is up about 0.6 in the pre-market, roughly percent. And now it's guess what, guys? Moving above 278. That's a very good sign. 278 is a point that we've talked about on this channel a ton. And we're breaking out of that point. And now in the pre-market, we're pushing 280 at this point. And you guys can see when the CPI data initially came out, triple Q before it actually was roughly 279. It dumped all the way to 273. It lost 2%, 2.2%. Now it's recovered all that. We're breaking out again above 278. Now we're looking to hit 280. If this thing takes 285 out, we could see even more upside on triple Q. So yeah, markets are loving this, guys. The metals are loving this as well. Let me show you guys this. Silver's up 3.5%. I mean, look at that. Silver is now taking out the highs from the past couple days. Looks like it wants to push back to 25, which is good out there for the silver people, which I don't, I'm more of a gold guy. And look at gold, holy crap, big day for gold. Good thing I caught this on video. It just broke 1,900 an ounce, guys. 1,900 an ounce for the first time since, oh my God, has it been that long? Yeah, it's been that long since May. Wow. So it's been 7 months since gold has broken 1,900. Now it's up 1.3%, 25 an ounce. And there we go, over 1,900 an ounce. And this is why I like gold. Call me a boomer. Call me a gold bug. I mean, actually, to be honest, no one's ever called me that. But because you guys know I'm not a gold bug. But I've always talked about how having a little bit, at least in my opinion, in your portfolio is a decent idea. And this is, I've owned gold for years at this point, and it's really provided stability. If you guys look at how gold has performed in just the past year, I mean, this is not considering or accounting for inflation, but just looking at some, raw data here. Let's say, what was it a year ago? What was gold at roughly a year ago? 1,780, 1,800 an ounce. it is up about 6%. Again, not looking at inflation, but just looking at the price, 6% from that point. That's not too bad considering a lot of tech stocks have been abolished. A lot of just stocks in general. I mean, the indexes, even though the S&P is not in a bear market anymore, it has not been pretty. So gold is looking pretty good here, guys. And let's see. I mean, we're not seeing, of course, any market movement yet because markets have not opened yet. But out of big tech, let's see what's moving here this morning before I do wrap up the video. Make sure if you guys are finding value, hit that like button. If you haven't done so already, make sure to subscribe as well. I really appreciate you all as always. So Apple right now is ripping. It is up to the mid 130s. It's looking to be, how much is it up right now? Roughly, actually, it's not ripping really from yesterday's close, but it's up 0.9%. Not too bad. We have Amazon in the pre-market, which had a very good day yesterday. This is knocking on $100 door. It's like, hey, we're looking to, come back over $100, and we can see here 100, 95, 100 has been a big resistance. If that breaks, we can see a lot more upside on Amazon. What else? Is Meta looking pretty decent this morning? Yeah, it's pushing mid 130s again. Google is looking to push probably mid 90s. Yeah, $93 is where Google is at. So I don't want to make this video too long, guys. I realize maybe I talked a little bit too much about the CPI, but it's all good. We got what needed to get out on the on this video. I got the message out. We got the info out. So with that being said, if you enjoy the video, again, hit that like button, subscribe, and don't forget to get your free stocks from Moomoo, up to 15 stocks, each up to $2,000 using that link down below. And you could also get 12 stocks from Webull, also using that link down below. And with that being said, I will catch you guys in the next video. Peace out.